Hello, my friends. My name is Rainer, and welcome back to this week's market analysis. So, in this week, I'd like to talk a little bit on how do you know when you're wrong, because I see, most traders they put on a trade, and when price goes against them, and they are starting to see their account bleeding, day after day, but they're still not out of the trade because they have no idea when they are wrong. So before we put on each trade as a trader, we have to know where is our anchor point. Where is the point whereby if price touches that level, it would invalidate our trade and tells us that we are wrong. And when we are wrong, we have no business continuing to be in that trade. So in this week's market analysis, I will share with you a few trades I took, a few trades that I've lost, a few trades that I've made money, and share with you where I actually managed my trade, how I did it, and I put my stop loss at a level where I know where I'm wrong. Because the moment price touched that level, I want to get off the trade. So this is what I want to share with you this week, and I'll see you over there. Okay, so another thing that I want to add is, as a trader, I think it's of paramount importance to actually know where you want to exit your trades even before you enter. Because from your entry to your exits, you can define what is your risk. And from that risk, you can actually know how much of an impact it will have on your account, given the position size that you'll be taking. So if you find that the risk that you are taking is way too much, then you have to pass the trade. I mean, there's no point, finding a setup that requires a larger than usual risk, and you find that it's too big relative to your account size, and after which the trade goes wrong, you blow up half your account size, and that is poor risk management. So it is important to know where you're wrong, how much is the risk that you have to undertake to know you're wrong, and if it's too much to bear, please skip the trade. So this is the trade of Palladium I took. So I want to share with you my thought process on why I entered, why I exited. So for this trade, basically at this point in time, say it was somewhere, I think it was here, I was looking at the chart and I noticed that Palladium has been respecting the 20 period moving average. Also on the higher time frame buyers I had, I noticed that Palladium was also in a downtrend, and the weekly chart also broke out of a multi-year low. So I was telling myself, okay, if Palladium does retrace back towards the 20 EMA, I'll be looking for a short opportunity. But if it doesn't get there, I would also consider trading the breakout towards the downside if price trades below this swing low over here. So what happened was price did not fill me when at a limit sell order, because I think I placed a sell order at a 20 EMA. I did not get filled. Instead, I got filled when price took out this swing low over here, and I got short on Palladium. And if you look after which, the sell down just happened pretty quickly. I sold somewhere here, sell down happened, over here, retrace a little, sell down, then it starts consolidating, sell down again. And so right from the start, this trade was pretty easy to manage emotionally because price almost immediately went in my favor. So there was no pain in enduring for price when it goes against me. And I tripped my stop loss basically at a very logical area. I got short because I noticed the 20 EMA is acting as a dynamic resistance. So my basis for a short is based on the fact that the 20 EMA has been acting as a dynamic resistance. So it only makes sense for me that if the 20 EMA is breached, okay, let me repeat, if the 20 EMA is breached, then it makes sense that my original plan on this trade has been invalidated, because my short bias was based on the 20 EMA. If the 20 EMA is not holding up anymore, I have no business in staying on in this trade. So what I did was I placed my stop loss just a little bit above the 20 EMA for a buffer, and you notice I got basically stopped out on this candle over here. So basically I had my stop loss somewhere at this black line over here. I did not put my stop loss exactly at the 20 EMA. I gave it some buffer, so the buffer was somewhere around here at this black line, and when this candle stopped me out, I got stopped out for this trade on Palladium. It was a small win, but this is actually my thought process on how I manage it, based on the fact that I use the 20 EMA as my trailing stop. Because logically, when you look at this chart, the 20 EMA has been acting as a dynamic resistance. So I simply used it as a basis to get out of the trade when I'm wrong. And what happened now is just basically, price shot up higher, then it sell down lower back towards where I got stopped out somewhere that area. And I think most traders at this point in time, they will feel sorry for themselves. They feel the pain and say, I exited too early. They think that perhaps price may go down lower, and making them feel like a fool. And honestly, price could go lower. It could trade down lower. And I tell you, I'm perfectly fine with it because I had a plan and I trade my plan. I simply follow my plan. I do not know what price will do. It could, sell down lower, causing me to miss further portion of the move, especially so if I have no trading setups that allow me to continue trading this trend. But it's okay, because I know as a trend follower, I cannot catch all trends in the market. My trading plan is only meant and suited to catch certain trends in the market, not every trend. So there are times whereby I may miss a move in the market, but it's okay. The next thing I'll look at is I'll look for a re-entry. If it presents itself according to my trading setup, I'll look to re-enter the markets. But if it doesn't present, I'm fine with it, and I'll move on onto something else that meets my trading setup. So let me share with you another example. So if you recall, soybean was a trade I took as well. And basically my basis for this trade again is I noticed lower highs, lower highs, lower highs, lower highs, lower highs coming into this multi-year support. So basically what I did was I traded a breakout as well, just below this swing low over here. So my sell stop order was somewhere around here. So as you can see, price went in my favor, right? It was pretty smooth at the start. But after which, price start retracing against me and start to feel a little bit of pain. My original stop loss was somewhere around here. So at this juncture over here, I did not get stopped out of the trade because my stop loss is still over here. And if you come and think about it, there is actually a good chance for this previous support, which is now turned resistance, to hold, and price could potentially go down lower. So that was at the back of my head. So I did not actually manually exited the trade myself. So what happened next was price then traded lower once again in my favor. But before it can drop any lower, what happened is that there's this spike up and it rallied all the way up, taking out my stops over here. So you can see I had an initial stop loss at a level whereby I know if price were to reach the area, my trade idea would be invalidated. And if you look at it now, it makes sense, because if price were to come back to this stop loss over here, my original stop loss around here, it's telling me that the breakout is probably a false breakout, because if it is a real breakout, it should, number one, go my way almost immediately. Or number two, it would be a retest, meaning price break off the level, then it retests the previous support, now turn resistance, and after that, go into my direction once more. But what happened is, no, it did not happen. It did not occur number one, or it did not occur number two. Instead, what happened was it retests and then it breaks higher and stopping me out for the trade. So I'm perfectly happy being stopped out of this trade because I followed my rules. I followed my plan. That level is a level that I want to get out of the trade. I don't want to stay in there anymore. So I would say, or I can say that I'm happy that I got stopped out of this trade. And again, if you look at hindsight, you'll be thankful that you actually got stopped out of your trade over here. Because if you didn't, look at this strong rally over here. You may probably wiped out at least 30 or 40% of your trading account if you do not have a stops in place. So for me, I'm thankful I got off the trade and I have no issues about it. So one last thing to share with you is this. Dollar yen. Dollar yen is over here. And I think most of you still recall, if you've been following me over the last few weeks, I said I went long based on this buy stop order over here above this swing high. I got long over here. Price went in my favor initially. Then it started chopping back and forth. And right now it closed somewhere around here. And my original stop loss is somewhere here, just below this swing low. Is my original 2 ATR stop loss, and I've not adjusted it yet, because if you look at it, right, there is a possibility that this resistance may act as potential support. So there's no point exiting the trade right now. It's near my entry point. It's going whipping back and forth. Emotionally, for newer traders, it may be uncomfortable because you are in the money, you're out of the money, you're in the money, out of the money. But as a professional trader, this is what you have to do. You have a plan. Your plan is based on what you have learned from the markets. You know that over the law of large number, you have an edge in the markets. So for me, my stop loss is still over here at a logical area, because I know if price reaches my stop loss over here, this current support, right, this previous resistance turn support would have been broken. It would have been breached. You have to trade lower, and chances are, to me, it will be a false breakout towards the upside, and there's no business for me to stay in this trade any longer. So I hope this I hope this week's video is useful for you because we have been mainly talking about, how to know when you're wrong in your trading. So the moment you know you're wrong, the moment price comes to a level where it has invalidated your initial trade idea, then you have no business staying in the trade anymore. So I wish all of you good luck and good trading. If you have any comments, feel free to leave it below. And with that, I'll talk to you soon.